3 high-quality dividend-paying stocks that will help you earn a substantial amount of dividend income without compromising growth potential, and also offers dividend safety on top of this. Now, one of my favorite things about dividend growth investing and what I've really enjoyed over the past 7+ years that I've been building out my dividend growth portfolio is hitting different milestones of dividend income to be able to use some of the dividend income to, if I were to choose to use, to cover a bill completely. Now, like I said in this video, we're going to be going over 3 of my favorite dividend-paying stocks that I think would be perfect options for an investor to pretty simply earn upwards of $250 per month in dividend income. So if you want to figure out which 3 stocks I'm talking about, make sure to stick around, drop a like down below, and let's get right into the first one. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first dividend paying stock that I think could be an awesome option for an investor looking to earn a substantial amount of dividend income from day one, but not only that, have dividend safety along with it, meaning that most likely the dividend is not going to be cut anytime soon here. The stock I'm talking about is ticker symbol O, of course, Realty Income Corporation. Now, Realty Income is the largest real estate investment trust in North America, and although Realty Income is in a slump right now, the stock is up 531% on the max time frame. Now, like I mentioned, Realty Income hasn't been trading all that well as of recently, and this is of course because interest rates are still relatively pretty high, which of course is putting pressure on the real estate sector as a whole. Now, with most stocks that offer, say, north of 5 or 6% starting dividend yields, and of course that pay dividends monthly, which is important for this video's example because I want to find 3 different stocks that investors can buy and earn over $250 on a monthly basis. Realty Income personally does offer a 5.9% starting forward dividend yield, which is sky high in my opinion, considering Realty Income does have the potential to really grow over time as far as share price goes. Especially where Realty Income is trading as of right now, I think it is an absolute buy the dip opportunity. But on top of that, Realty Income's dividend is very, very safe in my opinion. Now, Realty Income is the monthly paying dividend stock and has been paying dividends monthly for many years. But on top of that, Realty Income has not only never cut their dividend, but also has raised their dividend substantially. And to give you an idea, just for me specifically, I started buying Realty Income stock years ago when Realty Income was paying around 21 or 22 cents on a monthly basis. Now those same shares of Realty Income that I still have stuck away in my portfolio are paying me 26 cents per share per month. Now, an extra 4 or 5 cents on a monthly basis per share might not seem like all that much, but over time, if you buy, say, 10, 100, 1,000 shares of whatever given stock or ETF, it definitely adds up. Now, if an investor was to use Realty Income to earn $250 per month in dividends, and if we want to figure out exactly how many shares of Realty Income they would need to buy, Realty Income pays around 26 cents per share per month. So if we wanted to make $250 monthly, an investor would need to own around 961 shares of ticker symbol O, which would cost an investor right around $50,000. Now, the next stock that offers not only a large starting dividend yield, growth potential long term, and dividend safety is Main Street Capital, or ticker symbol MAIN. Now, Main Street Capital is up 257% on the max time frame, and pretty much ever since 2020, Main Street Capital has been on a rip, and it's trading over double of the low in 2020 as of right now. Now, over the last year, Main Street Capital is also up quite a bit, 13.23%, so it's not the best buying opportunity of all time, of course, at least compared to how Main is traded historically, although for me personally in my portfolio, I have actually been adding a few more shares of Main over the last few weeks. Now, Main Street Capital normally offers an even higher starting dividend yield than this, but because of course Main Street Capital's price is so high right now, the dividend yield is going to be shrunken to 6.23%, which again is not all that bad whatsoever. But just a few months back when Main Street Capital was trading in the mid 30s, Main Street Capital was offering almost an 8% forward yield, which I'm lucky to say that's when I grabbed a bunch of my shares of Main. Although I still am grabbing some more shares of Main here and there. Now, what's awesome about Main is not only the fact that the dividend is relatively safe, and the fact that Main Street Capital's stock price has grown pretty significantly over time, but also Main Street Capital pays a dividend monthly that has been bigger and bigger over time, just slightly at least. But if you can see right here, all these darker lines right here, these are special dividends. Yes, Main Street Capital has also paid special dividends pretty much once a quarter more or less, and this is over the past few years. So this basically means that if you hold shares of Main Street Capital, you get your monthly dividend. Like normal, nothing all that crazy there, but at least over the last few years, Main Street Capital has on top of that been paying a special dividend as sort of a bonus to investors, which of course drastically increases the amount of dividend income that you're going to earn if you hold on to shares of Main. Now, these special dividends are not necessarily going to always be here for sure. I mean, heck, dividends in general could always be cut or changed, but over the past few years, Main has done quite well as a company, and because of that reason, they're paying bigger and bigger dividends over time, and on top of that, paying special dividends, which as a shareholder, I don't mind whatsoever. Now, because Main Street Capital pays more or less 24 cents on a monthly basis, we would take $250 and divide it by 24 cents, which means you would have to buy around 1,041 shares of Main Street Capital in order to hit that $250 dividend income goal if you were to just hold on to Main Street Capital solely. Or you'd have to buy around $47,916 worth of Main to earn $250 a month. Now, the last dividend payer that I think could be a possibly good option for an investor to look into if they were interested in earning a significant amount of dividends on a monthly basis and also want somewhat of a safe dividend. This one's actually an ETF. It's SVOL, or the Simplified Volatility Premium ETF. Now, I've talked about this ETF in past videos, and what I like about this ETF is that it is what I would consider an ultra high yielder, and you're going to see why in a second here. Now, in the max time frame, SVOL has dipped quite a bit, and this was pretty much between 2021 and 2022. Since then, SVOL has basically traded sideways, which doesn't really seem all that great, but considering how big SVOL's dividend is, I don't think anyone's complaining. Now, to get into the dividend, SVOL has a trailing 12-month dividend yield of around 16.24%. Now, because of the way that SVOL works, the dividends are not going to necessarily be exactly the same every single month. But even that being said, you can see that SVOL pretty much pays more or less 30 cents on a monthly basis, which is massive, especially for an ETF that costs only 22 or 23 bucks. Now, like I mentioned, in this video, we're supposed to find different monthly payers to earn $250 on a monthly basis, somewhat fast and somewhat safe. Now, even though SVOL does not necessarily have the growth potential like the other two stocks have, in my opinion, SVOL's dividend has been consistent since the ETF's inception, at least more or less, and of course, SVOL offers a massive amount of income for investors basically from day one. Now, because SVOL pays around 30 cents more or less on a monthly basis, you would need around 833 shares of SVOL in order to earn around 250 bucks. And the fact that SVOL is around $22.60, an investor would need to spend around $18,800 to earn an extra $250 per month in dividends just from this single ETF. So there we have it, guys. Those are 3 different dividend payers that could easily and safely get investors to the $250 per month dividend income goal without compromising dividend safety and other things. Now, out of all 3 of the examples we went through in today's video, I want to hear from you guys down below. If you could only choose to hold on to either Realty Income, Main Street Capital, or SVOL, which one would you choose and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more feature content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.